Good evening, dear colleagues. As always, it's Sunday and I'm Dan Strelkov with the ForexTimes project. As is tradition, I'm inviting you to join the ForexTimes community. We've added some new sections in addition to the strategic target levels based on Chicago Mercantile Exchange data, which I mentioned last time. We now have a new section on triangles according to Ralph Elliott's waves. I illustrate triangles as they represent the penultimate waves in Elliott's theory. Therefore, I depict the median line of the triangle as the target level that the price will likely reach in a large number of scenarios. Dear colleagues, come and check it out. These new sections won't leave you indifferent, just like our consultations, either individually or in chat, as well as our trading signals and, of course, the daily morning forecasts based on Chicago Mercantile Exchange data. So let's get started by analyzing the euro against the US dollar. According to the Commodity Futures Trading Commission, we see a 50% increase in buyers and a 4% increase in the capitalization of the trading instrument to 243 million. You can clearly see the impulsive movement. However, at this moment, I would prefer not to buy the euro, but rather wait. And here's why. The thing is that the euro is currently at the weekly balance, and the strongest support and resistance ranges are, as you can see, almost equidistant from the price. This means that buying right now would be a gamble. It's easier to flip a coin. However, friends, if we look at the monthly options contracts for this trading instrument, we'll see that the support range is not that far away and the price is quite close to this strong range. Therefore, it's best to consider buying this instrument from the 50% to 61.8% Fibonacci range with a stop loss slightly below the local minimum or the impulse base. Why? Because I believe the movement hasn't finished yet. We see a zigzag in wave A, then a zigzag in wave B, and it seems we're still missing another zigzag in wave C, potentially reaching the 61.8% Fibonacci level, from which a buy decision could be made for the coming trading week. However, friends, I'd like to draw your attention to something. Specifically, look at the accumulation of options contracts that have recently appeared. These are monthly options contracts with a $1 billion accumulation on put options and $988 million on call options. These accumulations are close to each other. In my experience over the past 4 years, when such large options accumulations are close, it significantly strengthens these levels. Moreover, if we also look at the put options contracts slightly lower, we see another accumulation, again around $1 billion. It's clear that the hedging options have been here for the entire options month. Therefore, friends, when the euro updates its highs and reaches the target resistance range, I'll immediately post about these strategic levels in the ForexTimes community, highlighting the two upper strategic levels, $1 billion and $988 million as the target levels the euro is highly likely to reach within the next 1.5 to 3 months. We might understand why this could happen from observing the trading instruments such as gold, given that the correlation between the euro and gold is often positive. So, friends, let's discuss gold. We will be considering it for buying, despite the data from the Commodity Futures Trading Commission, which shows a 3% decrease in buyers and a 3% decrease in the capitalization of the trading instrument. This only indicates that the trend for gold is upward. The decrease in buyers suggests a possible corrective movement of the trading instrument in the upcoming trading week. And friends, since I suggest buying this trading instrument, a corrective move on Monday, Tuesday, or early Wednesday would be quite favorable. After this correction, we can place pending buy orders above the local maximum. Our target levels will be the upper boundary of the market maker's range, specifically the loss level of the market maker, which is at the price mark of 2,500. Friends, why am I so eager to buy this trading instrument? There is a strong likelihood that a triangle has formed in gold. You know that a triangle is the penultimate wave, and if the entry into the triangle was from below, and you know that for the past few months gold has been in an upward impulsive move, then the triangle is a corrective structure, the penultimate wave. Therefore, we should end the impulsive movement with an impulse, meaning this wave should be impulsive. Let's take a look and analyze this wave to see if that's the case. Now, we'll break down this wave and count 1, 2, 3, 4, 5. But wait, there are 7 waves, friends, which should either be 3 waves or 5 waves in the structure of a terminal diagonal triangle, but not 7. So what does 7 waves mean? Most likely the 7 waves are a zigzag in wave W, a connector in wave X, and a zigzag in wave Y. This is nothing but a corrective pattern, but how can an impulsive move end with a corrective pattern after a triangle? Only in the form of a terminal diagonal triangle. There aren't many other options. Therefore, a terminal diagonal triangle is forming, and it will likely look something like this. The first wave, the second, now the third wave is forming, then the fourth, and finally the fifth wave. So the third, fourth, and fifth waves, friends, might not be good news for those who are selling this trading instrument, because with this likely terminal diagonal triangle pattern, we could be seeing this for at least a month or a month and a half, maybe even 2 if the fifth wave extends a bit. However, after this, we expect a significant drop. And friends, pay attention. Where to? I think everyone has guessed it, at least to the median line of our triangle, which I will mention after the price updates the local maximum. I will immediately post about the triangle in the community and mark the median line of the triangle as our first target level. But there's a big but. Let's assume that there is no triangle at all, and instead we have a regular corrective structure. After that, we start with wave 1, 2, 3, 4, 5, and maybe the impulse has already ended. And right now we're actually looking downward, turning downwards. Let's consider and analyze this scenario as well. If we look at it this way, the first wave, second, and third, because it's extended, 1, 2, 3, 4, 5, the impulse of the third wave consists of a 5-wave impulsive structure. Everything is quite simple according to the rules. It all looks fine, but friends, if this is the first wave, then it should again be either a 5-wave or an impulsive structure. However, here we can't find a 5-wave impulsive structure or a leading diagonal triangle. But what can we find? We can again find a triangle, wave A, wave C, small wave D, and wave E. And if it's a triangle, then 1, 2, 3. We also have a corrective pattern here in the form of a zigzag, and then another zigzag, and then a double zigzag. So friends, it seems to me that we indeed have a triangle, and now I am illustrating it as a terminal diagonal triangle, after which there will be a significant decline. Well, I hope that's clear. By the way, what should we do in the upcoming trading week? I'll remind you that if on Monday, Tuesday, and early Wednesday we see a corrective structure, we can place a pending buy order to enter the market. If you are already in the market with a buy position, then congratulations. If you're selling, it might be a bit painful for you due to the continued rise in the trading instrument, which might still have a long way to go, since a likely terminal diagonal triangle is forming. It could take a month, month and a half, or maybe even 2 months to fully develop. And friends, the SP 500 index is likely continuing its decline. The reason is that 3 corrective waves have formed, and it might seem possible to keep buying since we've had a bullish impulse movement over the past year and a half. However, this corrective structure currently indicates a strong likelihood of further decline for this trading instrument. As I have been mentioning for several months and showing you the put options contracts, I can once again show that professionals have long believed in the decline of this trading instrument. Just look at the accumulation of options contracts. There was about $150 billion. Now, since these are weekly options contracts, most of them have expired, but trust me, when I calculated, it was around $150 billion. This shows how much the professionals believed in the decline of this trading instrument. And by the way, we now have monthly options contracts, and many of these contracts haven't expired yet. Please look at the accumulation of options contracts at the top and at the bottom. I think you can clearly see that professionals still believe that the decline of this trading instrument is likely and it could even intensify. Honestly, I can't imagine how there could be 1, 2, 3, 4, 5 waves here because of this zigzag. But the thing is, initial diagonal triangles often start with zigzags. And in the end, we could even draw something like this: 1, 2, 3, forming an initial diagonal triangle, then a move up, and then further down, 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 far, far down. But let's not look that far ahead right now. Let's focus on the upcoming trading week. Sorry, my terminal seems to be acting up. All right, the terminal doesn't want to cooperate with me. So for the upcoming trading week, we should consider selling only, friends. Yes, the terminal doesn't want to cooperate. Selling exclusively within the framework of a zigzag correction, forming another zigzag. Therefore, friends, let's remember either Fibonacci retracements and make a market entry decision from the 50%, 61.8% range, or we wait for a downward impulse correction and enter with a sell stop pending order. Friends, this trading instrument might be the most promising for the upcoming trading week. This is because it's reacting strongly to the geopolitical situation in the world, such as the Middle East and the Asian region, with China eyeing Taiwan and closer regions as well. So entering the market here could be tough, especially with gold. But again, if we see an obvious correction, then yes, the continuation of growth is highly probable. As for the euro, it's also quite good for buying in the upcoming trading week. But the accumulation of put options contracts for sums of $1 billion here, nearly $1 billion there, and over $1 billion here, it adds up to about $4 billion altogether at the bottom. And this is not for nothing, friends, not for nothing. Thus, the SP 500 index is probably one of the most promising trading instruments for the upcoming trading week. However, in the ForexTimes community, friends, you'll find even more trading instruments with daily morning forecasts. For about 14 to 15 trading instruments, I write strategic target levels and draw triangles with the median line of the triangle as a reminder that the triangle is the penultimate wave according to Ralph Nelson Elliott's wave theory. The median line of the triangle is an excellent target level for a price reversal, either into a correction or for the continuation of the impulse movement. Thank you very much, friends, for listening to me. As always, at the end, I invite you once more to the ForexTimes community. You won't regret it. Have a pleasant evening and goodbye.